Hi. So Carl the Prado here, A to Z Business IT. So I wanted to share with you a story. I got called in by a wealth manager for a client of his that had gotten a what we call a BEC, business email compromise. Basically, the bookkeeper's information had been hacked. That was what I knew, and there might be some issues. So one of the owners of the company, contacted me, and we set up a meeting. And I said, well, I said to her, well, what's the issue going on? Well, why do you think you were hacked? He goes, well, they were inside the bookkeeper's QuickBooks instance, and they tried to write a check, and they couldn't. We stopped that, but said, okay, well, can we talk to the bookkeeper? And so she took about another week. We got onto another meeting, finally got the bookkeeper on the phone. And I said, so tell me a little bit about what happened. He goes, well, first thing the bookkeeper wanted to do was that the other owner's email had been already compromised twice, and they hadn't done anything. So it really gives me a hint that it was a company where they really didn't value IT security or understand the potential risks that go on, where the owner of the company had already been breached twice. And so what happened on the third one, they weren't breaching the owner, they went to the bookkeeper. Probably because when they breached the owner twice, they figured out that the money wasn't with the owner directly, it was better off with the bookkeeper. And I'll go into this in a little depth. So I asked the bookkeeper if you could repeat what had gone on. He said, yeah, they definitely had gotten into the QuickBooks files. I said, so how are you running your QuickBooks? He goes, well, we run everything through QuickBooks. I said, can you explain? He goes, yeah, we run our payroll through there. We do all our billing and everything else. That's pretty much where our client data lives outside of a Dropbox account. I said they were able to get into the QuickBooks. They didn't turn on what was called multi-factor authentication. So when what happened was they got into the emails. They had not checked they had not put what we call MFA on the email, so they were able to break in. Nobody had done anything. They just said, well, we get break-ins once in a while. What's the worst that can happen? And so what happened was we went in there and said, okay, with the HR, they said QuickBooks was in the systems. They say they feel pretty good that they're already done. I said, all right, well, how did they do that? Well, they turned MFA on. And they're right. If you have MFA on and it's correctly configured, that will prevent the bad guys from getting in. But the question I had for them was, all right, well, you have your HR records there and you have client records. Was QuickBooks able to confirm with you that no data was taken during the breach? Nothing was exported. And the answer, he said, but they think they did, but they said you can't confirm it. I said, well, if you cannot confirm it, then you absolutely have to figure that they have it. And I know that's a pretty strong absolute, but what happens is when the bad guys come into a system, the last thing they want to do is let you know that they're there. Think about it. If you broke into a house, if you're inclined to do something like that, that would be the first thing you'd want to make sure nobody knew you were there. So you don't want to do any action. So what they'll do is they'll start copying off data, because that's not going to trigger anything. It's not going to trigger any alerts. And so at that point, once they've gotten everything they can get out of QuickBooks and any other file system, that's when they'll try something a little brazen, like writing a check to them, to themselves, which is what they did. They'd also done a couple of things inside of the emails where anything coming from Intuit, they had sent into the deleted folder, so the bookkeeper couldn't see it. So we didn't know how long it's been in there. He was guessing 2 or 3 weeks. It's probably been longer than that. That was probably when he started to see activity, when they were getting ready. They had finally finished all of the data, the value out of the data. So said, how many employees do you have currently? Said about 20. Said, how many records do you have? About 120 roughly. So all of those social security numbers are now, the bad guys have them. Now, on top of that, all of the customer data was there, and that was about 500 of those. And all of those people, the owner had said, well, we only deal with the top 1% of the 1%. He said, we don't take checks. I mean, we don't take credit cards. We don't do any type of loans or any financing. They have to pay out in cash. We usually will do a wire transfer. I said, so where are those records? They said, well, that's in the Dropbox. I said, again, can we prove that can we do an audit to make sure that nobody had gone outside of your network to get that information? She goes, no, we can't. So I said, again, it's probably out there. That's what you're looking at. Now, at this point, it's a little uncomfortable for both the owner, for the owner, because the owner's realizing that this is bigger than than just than an email being compromised. So they said, well, what's the next thing? So one of the things when you're dealing with a professional, you'll know when they're professional when they say what they can't do, not what they can do. And so one of the things that I looked at this situation, I said, well, we've got to do two things that I can't do directly. One is you're going to need an attorney. You're going to, a privacy attorney, somebody who's capable of sending out notifications to all the clients, somebody who can communicate with the right authorities so that, so you don't have to have any undue exposure, because right now you've basically leaked people's information indirectly, and you were supposed to be a custodian of that. And so there are reporting, in the Northeast, we have a number of states which all have reporting issues, all require different types of reporting, and that's kind of common. So I said the clock is running. The other thing you needed to have was what we call, it's a technical term, I hate using them. It's called an IR team. That means an incident response team. That's a team that most of the time is used by insurance companies. And what the insurance company wants before they pay a claim is they want to go in and have somebody who's can document every last page of where they feel the leak can come from, and package that back up so that they can present that to the insurance company and also to the technical side. So once they recognize where the hole is, well, the first thing you want to do is patch that hole correctly. If you don't, and you just go ahead and just do a what we call a wipe out of all the machines and restart them, you may not have gotten the bad guys out of the system. So that's part of what's required. And the attorneys won't even start the communications on any of the stuff that they need until they get the IR team involved on that side of it. So because they want to get the documentation, because they want to show what the facts and the findings. So that whole process, roughly, around 20,000. There was a small company, so for them it was around $20,000. Five full-time employees, 15 part-time seasonal employees. So, and that's not even including all the notifications and the fines. So what can we take away from this? Well, a couple of things, and it's always, hindsight is always 20/20. So first thing is the client, not the client, the referral or the introduction, the victim did not have cyber insurance. As a matter of fact, they were trying to get it after the fact. It's gonna be a little challenging to do that after you've had a cyber crime that you're in the middle of. Second thing the second issue is, they didn't turn when the owner was breached the first time, which would have been the first notice that there might be an issue. They did nothing. So there's really no way of really knowing how deep they were in the systems. So, if they had turned on multi-factor authentication, they had done some password management, they had some type of logging tools that were on the systems, they could have gone in and basically made sure this never happened in the first place. Really reduce the chances of it. If they had done some employee awareness training, so they were able to read different types of emails and phishing messages, including text messages, they would understand what not to click on. And that would also reduce their risk. Nobody wants to spend, as a business owner, you don't want to spend $1 more than you have to on anything. You want to make sure you have a good value, you want to make sure that what you're spending on, you're getting a good return on it, that it has a good value to you, just like you want to offer the best value to your clients. You're not necessarily the cheapest, but you want to offer the best value per dollar to your clients. So when you have something like this, an unintended expense that can come up, and in this case, it was very small. I mean, I guess my question to you is, after listening to this, and if you don't have any of the things I've listed, what do you think might happen, and how might you think that might affect your business? If you're not comfortable with that answer, I welcome you to reach out to me. I have a link here in the notes, ftc.a2zbusinessit. And I would be glad to spend a little time with you, helping you get a better handle, because we all work really hard to build our businesses. And the last thing we need is for somebody to click the wrong thing and to watch it go up in smoke. So Carl DeFrado, A to Z Business